Imagine towering skyscrapers, wide boulevards, and pristine plazas, entire cities built to perfection yet eerily silent. These are China's ghost cities, vast urban landscapes where high-rise buildings stand empty and roads lead to nowhere. It's a surreal sight, almost like a scene from a post-apocalyptic movie, but these are real places, the remnants of an aggressive push toward rapid urbanization. Over the past few decades, China embarked on a massive construction boom driven by an ambitious vision to modernize its cities and accommodate its growing population. However, this rush to build has led to numerous failed construction projects and entire cities that remain virtually uninhabited. These ghost cities are stark reminders of the risks inherent in unchecked development. In this video, we will delve into the origins of these ghost cities, highlight some of the most infamous examples, and explore the broader implications for China's economy and society. What went wrong and what does it mean for the future? The origins of ghost cities. The origins of China's ghost cities can be traced back to the late 20th and early 21st centuries, a period marked by rapid economic growth and urbanization. As China transitioned from a primarily agrarian society to an industrial powerhouse, the government pushed for the construction of new cities to accommodate the anticipated influx of urban dwellers. Local governments and developers, eager to demonstrate economic progress, embarked on massive construction projects, often in regions where the population and demand for housing were insufficient to justify such large-scale development. Incentives for construction. The aggressive urbanization strategy was fueled by several factors. Local governments, for instance, had a strong incentive to lease out land to developers as a means of boosting local GDP figures, which were critical for political advancement. Developers, on the other hand, were enticed by the seemingly insatiable demand for real estate, which was often viewed as a safe and lucrative investment. However, this rush to build often overlooked key factors such as actual market demand and the long-term sustainability of these projects, leading to the creation of entire cities that would eventually become ghost towns. Notable examples of ghost cities: Kangbashi, Ordos. Kangbashi, located in the Ordos region of Inner Mongolia, is perhaps one of the most well-known examples of a ghost city. Originally designed to house over 1 million residents, Kangbashi was intended to be a showcase of modern urban planning. However, despite its state-of-the-art infrastructure and amenities, the city remains largely uninhabited. By 2010, it became apparent that the population simply wasn't moving in as expected. And today, Kangbashi is often cited as the epitome of China's ghost city phenomenon, an urban paradise devoid of people. Sunshine City Kunming. Another striking example is the Sunshine City development in Kunming, Yunnan province. This project, which began in 2011, was part of a broader push to urbanize the region. However, the developers ran out of money mid-construction, and by 2013, work on the project had completely stalled. In 2021, after years of sitting idle, 15 unfinished high-rises were demolished in a controlled explosion. This dramatic event underscored the scale of failed investments in China's real estate sector and the stark realities of overbuilding. Other ghost cities. Beyond Kangbashi and Sunshine City, there are several other notable ghost cities across China. The Zhengdong New area in Zhengzhou was envisioned as a new central business district but remains sparsely populated. Similarly, the Yujiapu Financial District in Tianjin, once dubbed China's Manhattan, is a vast expanse of empty skyscrapers. These cities, along with others, highlight the overambitious nature of China's urban planning and the sobering consequences of prioritizing construction over community. Why did these projects fail? One of the primary reasons for the failure of these massive construction projects was a significant overestimation of demand for housing and commercial space. Developers and local governments anticipated a rapid influx of residents and businesses to these newly developed areas, driven by China's booming economy and urbanization. However, in many cases, the expected population growth never materialized, leaving these cities with vast amounts of unoccupied buildings. The reality was that the local populations were either unwilling or unable to afford the high costs associated with living in these new urban centers, leading to widespread vacancy. Financial mismanagement. Financial mismanagement also played a crucial role in the downfall of these projects. Many developers operated on tight budgets, relying heavily on pre-sales to fund construction. When market conditions shifted or demand waned, these developers often ran out of money before completing their projects. This left behind a landscape of unfinished buildings and frustrated investors. In some cases, developers took on too much debt, betting on ever-rising property values, only to find themselves unable to meet their financial obligations when the market slowed. Government oversight. The Chinese government's role in these failures cannot be overlooked. Local officials, motivated by the desire to boost local GDP and secure promotions, often prioritized rapid construction over sustainable development. This led to the approval of numerous projects without proper market analysis or long-term planning. As a result, entire cities were built without a clear understanding of who would live there or how the local economy would support such growth. The impact on China's economy and society. The economic fallout from these failed construction projects has been significant. Developers and investors have faced substantial financial losses, with some companies going bankrupt due to the inability to complete their projects or sell the properties they built. Local governments, which had invested heavily in infrastructure and land development, also suffered financial setbacks. The ripple effects of these failures have contributed to a broader slowdown in China's real estate sector, raising concerns about the stability of the country's economy. Social impact. The social impact of these ghost cities has been equally profound. Many Chinese citizens who invested their life savings in properties within these developments found themselves trapped in a financial nightmare. Some were left with unfinished homes, while others continued to pay mortgages on properties that were never completed or occupied. This situation has led to widespread disillusionment and frustration among the middle class, who once viewed real estate as a safe and reliable investment. Government response and future prospects. In response to these challenges, the Chinese government has implemented new regulations aimed at curbing overbuilding and reducing financial risks in the real estate sector. These measures include tighter controls on borrowing for developers and stricter oversight of construction projects. The government is also focusing on revitalizing existing ghost cities through incentives for businesses and residents to move in, though progress has been slow. Xiong'an New Area. The Xiong'an New Area is a key part of the government's strategy to create more sustainable urban developments. Unlike previous ghost cities, Xiong'an is being carefully planned with a focus on economic sustainability and environmental considerations. However, there is skepticism about whether this project will succeed where others have failed, particularly given its remote location and the challenges of attracting residents and businesses. China's ghost cities are a stark reminder of the risks of unchecked development. They highlight the importance of sustainable planning and the dangers of financial mismanagement. What are your thoughts on China's ghost cities? Comment below and don't forget to like, share, and subscribe for more insights on global issues.